This is the Rocket City Retirement Show with Cris Wallace. Cris loves educating people in person and over the airwaves. Whether it's retirement planning, investing, tax, or legacy, Cris prides himself in helping protect what matters to you. This is the Rocket City Retirement Show.
Hi, I'm Luann Fulmer, and we welcome you to the Rocket City Retirement Show with my friend and certified financial planner, financial advisor, Cris Wallace. He is president of WG Financial Group. Today, we are going to be talking about some great things regarding retirement, a lot of things to get to. If you have any questions, here's that phone number, 256-937-2010. That's how you can reach Cris. Get in there, get on his calendar. It is complimentary. You can call that number to set the appointment, or you can text the word visit and you'll get a response that way. That's simple. So call or text visit to 256-937-2010. And also, I want to remind you that, remember, you can check us out on Facebook. Anything that happens, maybe in the news during the week, if there are any updates that Cris wants to tell you about, you can check those out at WG Financial Group 256. Our motto here is retire, plan. I said it backwards. Plan, retire, and play. And again, that website is wgfinancialgroup.com. And Cris, hello to you.
Hello to you, Luann.
Great to be here with you. I want to mention, too, that this show is available anywhere you get your podcasts. Just look for Rocket City Retirement Show, right, Cris?
Apple or Spotify is the main ones. It seems
Okay.
like a lot of people go to Spotify. I actually use Apple. I have Spotify, but I actually use Apple quite a bit.
I don't know what I use. I just go to something on my phone that says podcast. What is that I'm using? I don't even know.
That one is probably through the Apple platform.
I bet it is.
If it says podcast, because I'm actually...
It's in purple. Yeah.
Yes, that's
Okay.
right.
That's
It's got the little microphone with some rings around it.
Yep.
Yeah, that's the Apple
That's it.
podcast.
Okay.
So that's where you go?
Yeah, that's where
that's
I
what
go.
I do. Yeah, that's what I do. But my son's totally different. They use Spotify.
They use Spotify.
They use Spotify for pretty much everything, all their music and their podcasts.
Music,
They
I do
that.
my music Spotify too. But
You do?
yeah, I
I
really
use
do.
Apple Music, actually. That's what I use.
You use Apple Music?
I do. And then I also have a subscription. So here we are. We talk about how these things add up in households. Hey, it happens in mine too.
Yes.
So I have Apple Music, but I also have Pandora.
I used to have Pandora.
Yeah. So I like Pandora for just certain stations that I have.
Oh.
I need to check what I pay for that. I'm not
You
even
better.
sure. I
You
think it's
better.
like $5, but
Yeah, but here year end, that's what we need to do, right? Check out our spending and our
For sure.
budgets.
We should review it, because here I'm sitting here talking about, I'm going, okay, well, there's two I pay for, Apple Music, and now I'm paying for Pandora.
And who else?
I know with Spotify, I don't pay anything. I have like the free version. I
Oh,
think.
good. Okay. Yeah, that's what
Yeah.
I probably have.
But let's not even get started on TV, Netflix and Hulu.
No, I don't want to get started on that. However, I saw a really good movie over Thanksgiving weekend, and I will recommend it. It's, believe it or not, it's Lindsay Lohan, and she's made a comeback. Yeah, it is a Christmas movie, and it's cute. It's very good.
Okay.
She produced it. Yeah. So tell me about your break.
I saw Gladiator 2.
Oh, you did. Bobby wants to see that.
So tell Bobby to wait. It's not that great.
Ooh.
And I just made a rhyme right on time.
Wait, because it's not that great.
It's not that great.
What does he need to wait for? Oh, for it to just come on television or on streaming? Yeah. Okay.
It's not great. So I'm a huge fan of the original Gladiator with Russell Crowe.
Yes.
Like, that's one of my all-time favorite movies.
Right.
So I couldn't wait for this movie to come out. I just thought the casting was, and I don't mean any disrespect to any of the people that got casted. I just thought they could have done a better job in casting. I don't think the movie was that great. It's kind of fake-ish. There's a couple of, I don't want to ruin it for people who haven't seen it, but there were some things in there that were more fake. And I like it when things are more real. Like, I'm not a big Marvel, superhero movie type of a person either.
Right.
Just because it's far-fetched and not real. So I don't know. I just didn't think it was that great. So you might want to tell Bobby, and if you're listening to the show, I warned you, if you go see it, it's not as good as the first one. And sequels rarely are, as we know.
Yeah.
But it wasn't that great. And the other thing that I found out, so my mother-in-law makes really good stuffing.
Oh.
All right. So here we go. We were having a little bit of this conversation pre-show.
Yeah.
So I call it stuffing.
Oh, I call it dressing.
Right. And that's what Jen calls it.
She calls it dressing?
Yes. And
Okay.
so I find out that they're really the same dish. It's just the way that they're cooked. So if it's
Okay.
stuffing, it's stuffed inside the bird.
And the
And
bird.
it cooks in the bird.
Yeah.
But it's kind of the same anyway.
Okay,
So
this is bread with a bunch of seasonings.
yeah. And my mother-in-law makes a phenomenal stuffing
Really?
or dressing, whatever you want to
I
call it.
wonder what I want to.
I don't know what she puts in it, but man, is it so good. So I eat a ton of that at Thanksgiving. So that was, that and ham, because the longtime listeners know that I do not like turkey.
I forgot you don't like turkey. Didn't
well-
you smoke it one time or something?
Yeah. So let me clarify that, because I think
Okay.
I had to clarify this last year.
Yeah.
I do like turkey, and I do eat turkey. I'm not the biggest fan of like oven roasted turkey, but if
Yeah.
you deep fry it, or who doesn't like anything deep fried? I mean,
Right.
deep fried Oreos. I mean, come on,
Right.
You can deep fry anything that's really good. So I do like deep fried turkey. I do like smoked turkey.
Yes,
I'm
smoked.
just not the biggest fan of oven roasted. And if
Yep.
I have oven roasted versus a spiral ham, I'm hamming it all day long. I'm gonna eat
Yeah.
ham. So that's what I had. I had a lot of ham, had a lot of stuffing / dressing, whatever you prefer to call it. And all in all, it's pretty good. We spent the time in Ohio spending it with Jen's family. So it's always good to see them.
Yes. Oh,
Yeah.
I love it.
Yeah, so I had a good time. All right, so I want to move into the market as we
Yes.
as we head towards the end of the year. There's a lot going on. So the markets have been kind of on fire lately, and if we just look at the just the returns in general. So if you go and take a look at what the S&P's done year to date, the S&P's up about 26.75%. So a really good year for the S&P. The NASDAQ's actually a little slightly higher than that at 29.4. So a really good year for both the S&P and NASDAQ. And then you've got the Dow bringing up the rear at 18.6. And then the aggregate bond index, which we've talked about some during this year, and it was having an okay year maybe a couple months ago, and then it dropped because yields started rising again. The aggregate bond index is right around 3% positive for the year. So right now, you could say all four of the major indices out there today are actually positive. And actually, just while we're recording, I'm just going to do this kind of live while we're recording. Let's check out gold. So let's look at GLD, which is the gold ETF,
Yeah.
Spider Gold Shares.
Okay. Mhm.
And actually, it's up. It's up 27.66
Wow.
on the year
So
too. So it's
everything
actually,
seems to be up.
yeah, it does. Actually, gold is slightly higher than the S&P at this point.
Oh,
So
really?
I kind of thought that, but so pretty good year overall for the markets, and I would assume that's going to continue to happen. We hope, as new president takes over and new economic agenda and such starts to take over. But who knows? I mean, the economy still appears to be going pretty strong. We actually tonight we're recording this on Tuesday. But I do a quarterly Zoom call with all of my clients just to go over economic data. And that's one of the things that we're going to talk about tonight is, things are good. Things
Awesome.
are, consumer spending is still strong. Of course, credit card balances are still really high, but they kind of, they've always been high. If you look back at any period of time, they're always high relative to that period of time. And money velocity is still good. So we talk about a lot of this on the quarterly call with the clients. So it should be pretty interesting as we do that tonight. Let's move into interest rates. Okay. So on the 18th, the Feds will meet again. The last time this year they'll meet.
I can't believe they're meeting that close to Christmas.
Yeah. I think they're going to give us another Christmas present too.
You think?
Yeah. I think there's going to be another rate cut.
Oh,
I was
okay.
looking a few weeks ago, and let's see if I can look back like 1 week. Yeah. So if I go back 1 week, let's go back 1 month. So
Okay.
1 month, it was like an 82% chance that there was going to be a rate cut. So we talk about interest rates a lot on the show and the Fed Fund futures, et cetera. So a month ago, we were like, hey, yeah, looks like one more cut. And then if we get to around the last part of November, it started kind of heading towards a 50-50 probability. Like there may be a cut and there may not. And it was at one point, it was right around 50-50. Well, as of this morning, I started looking at it again because we're getting closer to the 18th at this point. The closer we get, the more reliable this data becomes. And at this point, right now, it's like a 74% chance that there is another rate cut. So the upper end of the Fed target will be 450. So 425 to 450. So it looks like another 25 basis point cut. So that will obviously make like savings rates and CD rates start to drop a little bit. So if you're in money market funds and CDs, You're going to see renewal rates that are a lot lower. So looking at other alternatives to those may be, on your agenda in the near future because rates are going to drop down. I think overall, the kind of the median target where the Feds want to get to is probably going to be around that low 3% range.
Okay.
And I just think with inflation, how it's become a little bit more sticky, I think that the path to get there is going to be a little bit longer. So I guess what I'm saying is I think this might be the last one for a couple months, unless some things start to fall apart in the economy. The Feds may use that to stimulate. But I think right here we'll probably see the cut December 18th. I also believe that's already priced into the market. So if you're going to wait, and because I hear people say this all the time, well, I'm just going to wait and see what the Feds do. And well, too late. You're already late because the market starts pricing this stuff in ahead of time. That's what these futures look at. So I think we're going to see the cut on the 18th. And then I think what we're going to see is probably a couple month pause. They meet again on January 29th and then again on March. So I would say we see a cut here and then probably not see one in January. And then March is so far out, it's kind of hard to gauge that because a lot can change in the economy between now and then. But I firmly believe that we see the cut on the 18th and then we probably don't see one in January.
Okay.
And then, like I said, March kind of so far out, it's too far out to try to guess at that point.
Right. Yeah.
So we just kind of have to see how things go. But that's a little bit on the economic side. Just a couple of cleanup items. Next year, 401k contributions go up to $23,500. If you're over the age of 50, you can put in $7,500. If you're over the age of 60, between 60 and 63, you can put in $11,250 as catch up. So some changes coming next year where you can save a little bit more money. So be mindful of that. Make sure you're changing your contributions. We're now coming out of the tail end of open season and also the annual enrollment period. So hopefully you've got your health insurance packages picked and ready to go there. I know that we help people with Medicare decisions at the office. When you turn 65, we're available to do that, to help out and help you make decisions there because you get inundated with mail, Luann.
Chris, I know that. But now it's happening to Bobby because he's younger than me. He's just now going to turn 65 in March. So yeah, that's him now.
So he's just a little bit younger
About
than you.
8 months younger than me, yeah.
So me calling you a cougar the other day wasn't warranted.
See, I tried to tell you that.
I'm sorry, I just had to bust you on air.
He's a year younger in school, right? We went to the same high school, but
just a few months in terms of
months,
age.
yeah.
Okay. I'll take back the cougar comment.
Yeah, you take that back.
Yeah, all right.
I am no big deal.
Yeah. By the way, it was really good to see you a few weeks ago recording the TV episodes.
I loved it. Yeah,
we'll do it again in February.
Yes, we will. I'm excited. Yeah.
Awesome. Yeah. So if you're listening to the radio and you haven't checked out the TV show, hey, check it out. We're all over the Huntsville stations, early, mid-morning, Saturday, Sundays. Check it out. So
when does the TV start airing? Oh, that won't. The ones we just did won't air for a while. But
actually, they're going to be quick because I've already approved 2 of them. What they do is, obviously they record them. They have the compliance person sitting right there, and then they put them together within a couple of weeks. So I've already reviewed 2 and approved them. So we should be good to go.
Awesome. Good.
Yeah.
Some fresh new ones. Okay.
Yeah. 26 total, I think, at this point that we have. By the time rest of these get cycled through, I think we'll have 30 in rotation at that point.
Excellent.
So a lot of radio and a lot of TV together.
A lot of good things to learn from Chris there on all these shows, radio and TV. Yeah.
Mm-hmm. For sure. So, well, let's get into kind of where we want to head with the show a little bit. So I'm done with my market update.
You think? So. Okay. Well, then I want to, since I can take a pause here, I'm going to give out your phone number. Is that okay? Get that done now and make sure if you are listening and you want some guidance about anything that Chris has talked about year end, you can certainly do that. Our phone number is 256-937-2010. Okay, but that number on your phone, if you haven't done that already, 256-937-2010. You may call or text the word visit, and you can set up an appointment that way. But yeah, get on that calendar and get your questions answered. Chris and his team at WG Financial Group would love to guide you and help you with your retirement questions. Remember, he is a certified financial planner, a financial advisor, and he is the top guy at WG Financial Group. He is president. So we thank you so much for joining us. I want to make sure you get the website to WGFinancial.com, WGFinancialGroup.com. I missed the group, didn't I?
You did, but that's all right. I was coming for you.
Okay.
Yep.
Okay.
.com.
So let's get into this. When you get into retirement, your money's going to be facing a lot of risks. And I think, honestly, Chris, that's why people are scared to go into retirement, because you want to make sure that you're going to not do anything stupid, make sure your money's going to last as long as it can. And yet we don't know the finish line, So tell us the potential threats to our income in retirement.
Yeah. You know what? Something else just hit me I wanted to mention real quick. This has nothing to do with the question that you're asking. It does have to do with retirement.
Okay.
So do you remember, it's probably been a month or 6 weeks ago where I talked about the work from home and, when does that end?
Right.
Do you remember that conversation?
Yes, I do.
They were like Gen Zs working 2 or 3 jobs and taking naps and, all this other stuff that they were doing. I was like, when does that end? But, now that President Trump has been elected and will be inaugurated, come towards the end of January, and then we've got the DOGE, Department of Government Efficiency, right, with Elon and Vivek. And one of the things that they mentioned was people coming back to work.
Yeah.
So I just kind of want to be clear. I don't work for them, and I don't think they listen to my podcast, so they didn't get the the information from me. I don't think Elon listens to my podcast.
He might. You never know.
Yeah, I'd probably be willing to bet
Rocket City. Yeah, he watch him search it. He's into rockets. Yeah,
maybe he might. Yeah, I don't know.
I gotta hear this Cris Wallace guy.
But one of the things I wanted to mention on that note was I have a lot of clients actually that they're not retiring. They work for the federal government, but they're not retiring because they're still working from home, and they're like, hey, why do I want to retire? Or I've got some that don't even work for the federal government that are still, working from home. They're like, hey, why do I need to retire? I don't drive to work. I'm not spending any gas, and I get the same amount of work done. And
more is what I say, honestly.
Yeah, in some cases, I would say, yeah. I can tell you that at my house, though, and I think I said this when we were having this conversation, it's harder for me personally to work at home because my daughter's there. She's graduated high school, doesn't start her salon hair thing until the early part of next year.
Okay.
So I got her there. Not that she is distracting, but, she's there.
She's there, yeah.
But then I got my dogs.
And then
it's
your
like,
dogs.
Yeah, we need to install like a revolving door like you see at the malls, or the big buildings. You think
in and out.
Yeah, because they just want to go in and out, and they whine at the door, which is great. They whine and let you know they need to go out, but it's kind of like, oh my gosh, you just went out 15 minutes ago.
You got to get up, go let them out. Yeah.
Yeah, and it's especially annoying if I'm on like a Zoom or something like that. It's like, oh, excuse me, just 1 second. I got to let my dog out. So I don't get as much done. Plus the refrigerator's right there. Yeah.
That's true.
That's not a good thing.
Yeah, especially if you have any leftover ham.
Yeah, so the reason I mention that is it sounds like actually that may be one of their targets is to try to bring people back to work. So if you're a federal employee, you get ready to call it quits because you got to go back in the office. Hey, our number 256-937-2010. Give us a call. We're glad to help you out. So all right, let's get into your question. So what are some of the big threats or potential threats, right, to retirement? So first of all, we've talked about a lot of these on the show before. Longevity is a real deal. And I still, when I meet with clients, or prospects, I still have people tell me that they're not going to live a long time because their family didn't, their dad didn't, their uncle, grandfather, whatever, and they're probably going to die early. But that's not reality. And the reality is, if you've had let's say you've had a heart issue. So let's say maybe you had a heart attack or whatever at 58, or had to have a stent put in or something like that. You are now going to that doctor much more on a regular basis than previous. That's probably why you had to have the stent put in. You weren't going to the doctor enough. And then, you had the issue and medical technology helped you out. So chances of you living a lot longer are much greater now because you're paying attention to that. Plus, I just think there's also, just so much medical care and advice that's available today that's just helping people live a little bit longer. We know that the foods that we put in our body, what's good, what's bad. We obviously know like smoking's bad, and we know that diet and exercise plays a big role. We know in retirement we need to stay socially connected. That's really, really important to longevity there. So that's a big risk because the older you get, and here's kind of the double-edged sword with living a long time. Some people like to call it quality of life. And that's why it's really important to take care of your body so that your body's in good shape for the longer years that you live. Because really the longer you live, the body does break down. It's just kind of what it's designed to do. And then but you still need to have money to live on. Now, chances of you spending at the same rate that you were spending in your 60s versus what you might be spending in your 80s, there's probably going to be a big difference there, because chances are you're not going to be as, I guess, healthy and vigorous like you are today, and not going to be going out and traveling like you did in your 60s. But still, longevity is a threat, and that's where long-term care becomes more of a threat the older you get. If you don't die quickly, but just the body breaks down over time, you get dementia, Alzheimer's, whatever, longevity becomes a big risk. So that is a risk, even though, again, I have a lot of people, specifically men, that say, I'm not going to live a long time.
But we don't know.
We don't know, and that's not how we plan at the office.
Right.
We plan, unless you've got some sort of terminal illness where you're telling us that, yeah, I've got lung cancer or something like that, then we can kind of draw that in a little bit and kind of shorten up the life expectancy a little bit. So the other thing is having all of your eggs in one basket. So like when we think about NVIDIA, like that's one of the first things that comes to mind. It used to be kind of Apple and whatnot, but NVIDIA, if you got, a lot of your assets in one company, that can be risky, having all of your eggs in one basket, so to speak. That can be risky because where that company goes, you go. And, over the past decade, NVIDIA has been great to be in, but who would have saw that coming, say, 10, 15 years ago, that, hey, I'm going to put all my money in NVIDIA and it's about to take off. It's really hard to guess those. So you have to be really careful not to be overexposed into, one specific stock, especially specific stock, but maybe also specific sectors. So you want to be spread across several different sectors there, so that you're not all in one sector, just because that carries a lot of risk. And one of the other risks there is just taxes in retirement. I think when people think about retirement and taxes, I don't think that they think of it like as a big expense. Matter of fact, I don't think that they even think of it as an expense. I think it's usually looked at as, well, that's something I have to pay. It's taxes, and that's what I have to pay. Well, yeah, you have to pay it, and it will likely be one of the largest expenses for most people in retirement will end up being their taxes. So on the show multiple times, we've talked about certain things, and certain ways in which to control the taxes. And I think that's really, really important as you get into retirement, because now, instead of your employer doing it through payroll, you actually have to think about it. And I met with somebody yesterday, and I run into this all the time. They were figuring in the marginal rates as their tax rates, and that's just not the way that it works. So the basic big difference between marginal and effective is you have the marginal rates, the 10 to 12, 22, 24, so on and so forth. The effective rate is essentially the average tax across all of those brackets, because we know that a piece of our income is taxed at the 10% rate, a little bit more at the 12, a little bit more at the 22. The effective rate is the average of those brackets together. And that's, you have to look at both for different reasons. So like, for example, if you're doing a Roth conversion and you are in the 22 bracket, well, you're going to, if you do a Roth conversion and stay in the 22, your IRA is going to be taxed at 22%. So you can very easily figure the taxes owed on a conversion by knowing where you're at in the marginal. But if you want to look at your total taxes being paid, then you have to start looking at the effective rate, because then there's the blended version, or it's the blended total of each one of those brackets and where your income's taxed at. So that's important to realize that and be conscious of that.
Yes.
And then you throw in Social Security, which is not fully taxed.
It's what, 85% or something? Yeah.
Yes, ma'am. 85% is the worst case. So now you throw that curveball in there. It gets a little bit hard to figure out. But I think when we talk about people like trying to figure that out on their own, I think some people can. They can look at that and they really want to do that. That ain't me, though. Like I've told you before, it's me today because it's what I do for a living. But I don't want to be messing around with that in retirement. Some people get enjoyment out of doing all this stuff themselves, and that's fine. They can listen to my show and try to implement some things that we talk about. But that's not who I am. That's not who I want. I don't want to be that guy picking all my stocks in retirement. I mean, I want to have the base knowledge of it, sort of like I do with a house project right now. If I have somebody come in to do something at the house because I can't do it, I just kind of want to know what they're doing. Yeah. I don't need to micromanage how every nail goes into every stud and what type of nail they're using. And, that's not the way I don't want to be that way about my retirement plan either.
Right.
I just want to have that base knowledge. And I'm going to set myself up where it's just easy. I'm going to have income streams come in. I'll probably use some annuities in retirement just to give me guaranteed income because I don't have a pension. So I'll just kind of create my own pension with some of my own savings, and I'll invest the rest of it and let it, go a little bit more aggressively. But at the end of the day, I want it to be pretty simple, just because I don't want to worry about it. So I think kind of going back to taxes, it's a lot to kind of keep up with, and you got to keep an eye on it and make sure you don't bust through the IRMA brackets. You got to figure the net investment income tax. You got to watch where you're at with that, because there's all these little things. We talked about the Rubik's Cube before on the show. Had somebody solve it yesterday. Was it yesterday?
In your
Yes,
office? Oh,
yes.
awesome.
I think it's the third person to solve it, actually.
What? Oh my God.
So he's cranking on it, and we're going through his stuff, and he's sitting there clicking around like Rubik's Cube, and he finally solved it. But you could tell he wanted to do it.
Oh,
yeah, because you could just see the look
He
on
wasn't
his face.
listening. He probably wouldn't even listen to you.
A couple of times he wasn't. We had to repeat some things, but
I can just imagine him just concentrating. Yeah.
Yeah, no, but he got it solved out, so it's kind of cool. So the Rubik's Cube and taxes, that's where one of the things that he had done, and it's kind of funny that we're talking about NVIDIA, because he was concentrated heavily in a position, and he was worried about that. So he sold off a certain amount, and I said, "Whoa! I think 2 years out from now, Medicare is going to increase your premium because you probably got about $100,000 of capital gains, and you're in the single bracket. I can see, your Medicare premium going up in a couple of years. So you just want to be prepared for that. And, we probably would have had you sell off a little bit less, but he's kind of in this situation where it's not necessarily a bad thing either, because he's very heavily concentrated. And so he sold off to where his premium is going to increase. I think he's actually going to go up into IRMA bracket number 2. But at the same time, he also sold off some positions, so he's not so heavily concentrated in this one position. So it's like I told him in the meeting yesterday, it's like, okay, there's 2 schools of thought here. Neither one of these decisions are wrong. One's just wrong from a tax perspective, and the other is correct because you're so heavily concentrated. So it probably wasn't a bad thing to get unconcentrated or less concentrated rather. So anyway, so taxes is going to be a big expense for a lot of people. And then I think, Luann, just simply being unprepared. I think that when people think about retirement, they think about just their 401k, they think about their TSP, their IRA, and they think, yeah, okay, I can retire. I've got a little small pension, I got a little Social Security, I got my retirement account, I'm good. But there are so many other factors that I feel like you have to look at. You have to look at Medicare and what type of Medicare plan you're going to, sign up for. And you got to look at your Social Security and how am I going to claim? Am I going to wait? Am I going to claim early? Does my spouse, is she eligible for that additional where she gets kind of half of mine? What does that look like? Like we just talked about taxes. That's a big deal. We've got to keep an eye on that. Should I do Roth conversions? There's a lot that goes into retirement planning. And I think it's a lot deeper than just being invested in your IRA. And I think some people are just simply unprepared, and they're willing to just take those, risks and not ask for help. And so that's what we're here for. And that's why we do the show. If somebody wants help, you've been listening to the first half of the show. You can catch the whole show if you go out to Apple Podcast or Spotify. But this is the first half of the show. And if you'd like to call in and set up a discovery session, you can do that by calling 256-937-2010. Again, the number is 256-937-2010.
If you're pondering the longevity of your retirement savings with questions like, is my nest egg sufficient? Or how long will my retirement funds last? Consider scheduling a session with Cris Wallace. Text VISIT to 256-937-2010. Again, text VISIT to 256-937-2010 now to set up your appointment.
Quarters, just 25 cents. That's hardly anything, right? But Cris Wallace and his team at WG Financial see quarters a little differently. A quarter is a lot when it's a quarter of your retirement savings. Now, do you want to pay 25% or more in taxes during your retirement? Well, Cris can create a plan to help address that. Now, if the only time you think about taxes is when you file them, you don't have a tax strategy. But it's not too late to get one with the help from Cris Wallace. So act now to make sure you're not paying a quarter, dime, or even a penny more than you should. Call Cris Wallace and his team at WG Financial at 256-937-2010 to schedule your personalized tax strategy session. A quarter saved is a quarter earned. Call 256-937-2010 now. That's 256-937-2010. Investment advisory services made available through AE Wealth Management, LLC, a registered investment advisor. Firm may not give tax advice.
With so many worries in life, market volatility shouldn't be on your list. Help ensure your retirement plan is stable and independent of market swings. Just get in touch with Cris Wallace at 256-937-2010. That's 256-937-2010 to start planning.
And I want to make sure you have the website, WGFinancialGroup.com. That's WGFinancialGroup.com. And we are so happy to have you along with us today. You are listening to the Rocket City Retirement Show. I'm Lou Ann Fulmer here with Cris Wallace. And today we're talking about your risks in retirement, the risks with your money. And so, there are a lot of risks in retirement. Cris just mentioned them: living a long time, longevity, having all your eggs in one basket, taxes, and then just not being prepared.
Mm-hmm.
So now I got my papers all shuffled and I can't find out where I'm supposed to be. There I am. Okay, so sorry about that. So I'm going to see here. Let's talk a little bit about, I think, inflation. Okay, can we go to that?
Mm-hmm.
And
sure.
We all know we've seen inflation throughout our whole lives. When I was a kid, I would go to the store and I'd take a quarter and a penny and I'd get 25 cents of candy and then pay a penny for tax, but can't do that anymore. There is no more penny candy.
No, there's not.
No, and even candy bars were 10 cents. So, but anyway.
10 cents?
Uh-huh. Yeah, Snickers bar,
wow.
Reese's Pieces where you got 2. Yep, Baby Ruth, whatever. Name me your favorite candy bar.
I'm a Snickers guy, I think.
Oh, Snickers, it was a dime. A dime for a nice big candy bar. Yeah. So.
Yeah. So can we just talk about shrinkflation for a second?
Yes, which I hate.
Yeah. So I'll put this picture out there on our Facebook page. So while we were out of town, we stopped by Kroger in Ohio, and they had the Christmas tree, the little Debbie Christmas trees.
Oh, yes. Do you like those?
Oh, I love them. I love them too much.
Sugar.
Yeah, well, that's why I love them.
I know.
And they love me too. They don't want to leave. I look like a Christmas tree when I get finished eating about 2 or 3 of them. So yeah, I just kind of, anyway.
So you ate those? Yeah,
so we bought some of those, but I pulled one out and I took a photograph of it, and it's smaller.
Tiny? Yep.
Yeah, it's smaller.
Yes.
And we talk about shrinkflation. I don't eat fast food burgers often, but I will if I'm in a pinch and I'm really hungry.
Right.
So I was at one of the major fast food chains and I grabbed a burger, and it's smaller. It's a lot smaller than what it used to be.
Yeah, I know.
And the price is a lot more.
And it's more money. Yeah. Or they don't raise the price. Okay. But they shrink it. And you're like with some things I've gone, wow, that's great. They're just keeping the price down for us all. And then you get it and you're like, oh, well, here's the deal. It shrunk.
So think about the plastic bottles that you drink bottled water out of.
Uh-huh.
Which isn't bottled water, such a ripoff.
I know it.
Man, it's a moneymaker because I still buy them.
I still
buy
do
them
too.
for the office.
I still do. Hey, Chris, I got to tell you something. Do you know that when I was in college, I wished for something like bottled water? There was no such thing back in the 80s. And we were at cheerleading camp down in Texas. And it was when I was in college. And I was like, I just want regular water because I think we had like Perrier or something, and I just spit it out. And I'm thinking, I wonder if I would have said something to somebody, would have I made any money? If I could have said, hey, I have this idea.
You missed your opportunity. Somebody heard you.
Somebody did.
Billionaires. Yeah. So inflation.
Okay, sorry.
Last reading is down to about 2.6. Okay. So we've definitely seen it come down. Actually, on our client call, this is one of the things we're going to talk about, is it's become a little bit more sticky. So there was a quick drop there for a few months. We saw a pretty quick, fast drop. And now it's become pretty sticky. And if you look at the month over month, if you take out food and energy, we've seen some of the core inflation numbers month over month kind of rise. I think PCE is also rising a little bit. So that's not necessarily a good thing because we're not yet at the 2% mandate that the feds want to get at. So I think as far as that goes, there's still work to be done, which is why when I mentioned earlier in the show about the feds not dropping rates as quickly as once thought, because I don't think they're going to be able to do that because I think inflation is still there. And then if we get into some of the Trump tariff stuff, that could be inflationary in the short run because people or companies are likely to pass on the tariffs, and we may see that as raising the cost of goods in the short run. So it's definitely a risk that we need to consider. I'm not one of these people that think that we're going to have that Venezuelan type inflation that I often hear about, and some of these other countries. But it's definitely something that we need to plan for. And I've said this before, but there's one of the best ways to outpace inflation is to be invested in stocks. I mean, that's a proven way to outpace inflation. Is to just be invested. So I think when the battle that you fight mentally when you're a retiree is that you've got, this is what you have to retire on. You want to be careful with it and you don't want to lose it because it's all you got and you can't go back to work. But then we've got the inflation factor we have to worry about because we all need to have our money invested in a way that's outpacing inflation.
Right.
So that's the mental struggle that I think a lot of retirees today deal with is they want to protect what they have. They want to go conservative with it. And then long-term, I think they have a harder time outpacing inflation. So that's a big struggle that I think, people are going to deal with because there is a such thing, in my opinion, as being too conservative in retirement. I think you can be too conservative and then you run the risk of not being able to keep up with inflation, much less healthcare inflation, which is usually a little more than double what normal inflation really is. So it's a risk. It'll eat away at your purchasing power for sure. And then if you take a look at what I don't even want to say a basket of groceries, but just say a bag of groceries these days.
Mm-hmm.
Yeah, just go to the store and it's so much more expensive.
I know.
To buy groceries today than it was just 5 years ago.
Mm-hmm.
It's absolutely insane, the cost differential. And that really hits the retiree really hard because the vast majority of retirees are on a fixed income, Social Security, maybe a pension, maybe. And so it hits them really hard. It also hits the very young generation really hard because they're, making a little bit of money. So take my daughter, for example. She works. I think she makes like $16 or $17 an hour.
Mm-hmm. That's good.
But it is good.
Yeah.
But when you talk about going out to eat, like just normal today, if you go out for one person to, just one of the major food chains or whatever, you're talking $10 to $15.
Oh yeah, big time. Yeah.
By yourself just to eat.
Yep.
And then they flip that little screen around and it's like, it's going to ask you a few questions, for a tip. It's like, you just took my order. That's all you
right.
did.
Exactly.
I'm
Now I'm filling this out.
like 5 years ago, this wasn't even a thing. That's one of the things that came out during COVID. This whole tipping thing, it just came alive in COVID, and now it's like on every register you go to, they flip it around, and so I don't know. It's just
I feel guilty saying I don't want to tip if they've not done anything. I feel guilty hitting no or zero, but I do if they haven't done anything.
Yeah. So I'm with you, Luann. Like I'm a big tipper. I love to tip people.
Yeah.
But there comes a point, like if I'm just going to pick up like to-go food,
right?
like I don't really want to tip. So what I have done is because first of all, when they flip it around, it's always highlighted on the highest percentage.
Of course.
And I've seen it as high as 25%.
What? Oh my gosh.
And I don't mind tipping for good service. I will do that. So anyway, I've gotten to the habit now where I custom tip. You can
hit
custom and type in like $1 or $2 if I'm just picking up like to-go food.
Yeah. Well, you're nicer than me then.
Yeah. Well, here's the other thing too that I've gotten kind of savvy doing. So if I get coffee in the morning, I just pay cash.
Why?
Because you pay cash, they can't flip around the screen on you.
Oh, that's funny.
Yeah.
Oh, that's good.
Yeah,
Just
because my
cash.
cost of coffee's going up. And I know I sound cheap or whatever, but trust me, I'm a very good tipper, especially when we're in a restaurant that has like service.
Right.
But it's kind of like, okay, coffee is outrageous these days. The cost of it is just crazy. So I started paying for my coffee in cash. And then that way the screen doesn't get flipped around on me.
That's so
But
funny.
here's the
That's
downside to it. Some of these young people can't count back change.
I know.
So the very first time I did it, I got back too little in change. And I say,
tell him.
I did. I had to say, hey, I gave you a 10, and so anyway.
I know.
So
I hate that too. They need to work. That's what they need to work on in school,
They need to work on a lot of stuff, but we'll that's another conversation for another show.
I know. Oh my God.
All right. So inflation, big risk, got to be invested. But one of the best ways to outpace it is to stay invested.
Okay, stay invested. All right. So speaking of investing then, are retirees aware about the costs and fees that are kind of hidden in any of their retirement accounts and how do you help them?
I know. I'm sitting here shaking my head. You can't see me, but I'm shaking my head. No, because I run analysis on situations all the time. So take for an example, we have a family come in, they're working with XYZ firm in Huntsville. They bring their statement. I take a look at it. I run an analysis on it, and they're just chock full of all these mutual fund fees.
Oh dear.
And some of these fund fees that we see, and these are from firms, right here in the area, but they utilize funds. They're just expensive. And I'm going, why would you do that? Like, why would you use a mutual fund that has a 1.1 expense ratio? I mean, shoot, that's as much as some advisors charge to manage a whole portfolio. And you're paying that for that mutual fund. It just, to me, it makes no sense on why someone would do that. And maybe there's some revenue sharing reasons why. I don't know. But in our firm, we typically will use some individual stock positions, low cost ETFs, because one of the things that we can control, just like, we can control how many streaming channels we have. I can also choose which grocery store I want to shop at because I know which ones are a little bit cheaper. You can do the same thing with your investments if you know what you're doing. And for those that don't, that's why they call us. We do the analysis and say, hey, we can save you, 0.5%, 6.6% on your expense ratio just by making the change. And that's money going back into your pocket. So I think a lot of people, Luann, I think a lot of people know about it, but I still think there's some people out there, this is just not what they do. And they're really hard workers and they're really good savers and they're doing all the right things, but they're paying too much in a lot of areas. And, one of the things we do is do an analysis and take a look at it and say, hey, you can save money by going this direction and still have the same risk, but just pay less in fees. And who knows, because we're using index funds and ETFs, and you're likely to outperform because the mutual funds you're in currently, they're actively managed, and history tells us that they underperform most of the time. So you can probably have cheaper fees and maybe outperform potentially. So
Yeah. So today we are outlining different risks to your retirement income. And of course, people are worried that they're going to run out of money. Biggest fear in retirement, am I going to run out of my money? But if you are so worried about outliving your savings, maybe that could cause you to underspend in retirement. Do you ever see that, Chris?
Oh, all the time. Yeah, all the time. So here's what's going to happen. So the biggest fear for a retiree, like you just said, the biggest fear is running out of money. But here's the reality. And I think I've said this a number of times on the show. I actually don't think that is the biggest risk. Now, it's the biggest fear to a lot of retirees, but in my opinion, I don't think that that's the biggest risk because if your account balances are dropping, you can spend less money. You can say, okay, I don't have to buy that new car this year or used car, or I don't have to go on a trip this year or that big a trip. I can go on a smaller trip. You can kind of find ways to conserve money. So I actually don't think running out of money is one of the big risks, but it's one of the biggest fears. So that's just my opinion because people can control spend. One of the things that I think a lot of retirees are going to do is I think they're going to wake up one day at 78, 80, 82, and they're going to look in their bank accounts and their investment accounts, and they're going to say, man, we got a lot of money and our life expectancy now is less than 10 years.
Yeah.
Yeah, less than 10 years. And look at all this money that we did not spend.
Yeah.
So like, because you're involved with me and you do the show and we talk a lot. that's why we have the plan, retire, play motto, because we believe, and I've said this before, like the go-go years and no-go, slow-go, whatever, it all sounds really corny, but the longer I'm in the industry, it's like, okay, that's really true. Like when you're younger and healthier, you need to spend money. And you can say, well, I want to leave my kids money. Okay, that's fine. No problem. But I actually want you to go make memories with your kids and grandkids today, because I can tell you story, and I've said this a number of times on the radio, but I can tell you story upon story about my mama and papa, about how they took me to the beach, they took us to the lake, things that they did for us. They made memories with us, and they still saved their money, and they still passed away with a lot of money, but they spent their money and they tried to make some memories. So one of the things that I personally am doing in my own family is I hit all of my retirement savings targets that I need to hit in order to be retired. So I do have a financial plan, believe it or not, on myself.
As you should.
Yes, as I should, because I need to know, okay, I'm planning to work a lot longer, but I need to know if I want to get on TBD. Luann, if you
determined?
No, 2 bad days.
Oh, 2 bad days. That's right. That's right.
Yeah, 2 bad days on the radio with you, and I'm out.
Hey.
It might be 2 bad shows. It might be TBS with you. TBS, I'm out of here.
Shows and I'm out.
No, seriously. But no, I need to know, like, because I think when you're planning to retire, you need to also plan to retire earlier than you expect in case something happens, right?
Yeah.
So I have savings targets that I know that I'm supposed to hit. And once I hit those, then what I personally do is we spend extra money on trips and taking the kids, because there was a period of time, I'm getting kind of vulnerable here, where when Jennifer and I were building our business and building our wonderful client base that we have, money was tighter. Money was a lot tighter.
Yeah.
And there were vacations that we did not do. And I can, this is, I don't even want to tell you this, but yeah, like over a decade ago, I can remember sitting in a Panera Bread in the Panhandle, checking my bank account to make sure we could fully afford to go have lunch at Panera on vacation.
Oh, yeah, I know. Oh, yes.
Yeah, and I know it's kind of, I'm being very vulnerable talking about that right now, but this is the importance of building your plan.
Right.
Saving adequately in your retirement plans so that you're going to hit your goals. That's why when we work with a family and they're working with us and under our umbrella and we're doing their financial planning, we encourage them to bring their kids so that we can talk to the kids about their retirement planning, just about the things that they should be doing at a young age if they don't understand their 401ks, because it's really important that you pass along the message and you teach as many people as possible and you try to leave as many good footprints in their life as possible, especially not only from a spiritual perspective, but, and there goes that religious disclosure again.
There it is. Just got to put that on there.
It'll happen again. But also from a, just a money perspective and how to really learn how to boss your money. Because if you don't learn how to boss your money today, it will boss you the rest of your life. So you have to learn how to be a money boss is what you have to be. And you got to learn that at a young age. And I learned it later in life, and we're okay now because we're hitting all of our targets, and we're, Jennifer and I, basically, we don't have any debt except for our home.
Yeah.
And it's at a 2.75 interest rate. So we're not really in a huge hurry to pay that thing off just yet.
Yeah.
Yeah. So, so that's really important that, that we talk about that kind of stuff for sure.
Yeah. Okay. So, talking about risks with our money in retirement, sometimes people are just worried about, spending too much. And then they maybe invest differently if they're a little scared about that. So I want to kind of touch on that. And if you're not interested in investing, then what are some other options?
Yeah. So as you were kind of going over that question, I'm sitting here thinking about we have so much like media in our face all the time.
Don't we?
Our phones, Facebook, World War III starting, and everybody's so like, this is the next big thing that's about to happen. The next shoe is going to drop, whatever. And what that does is I believe that it distorts a young investor's view of how they should be investing. So what I mean by that is if you're below the age of 40, so let's just say at 40 and you're planning to work till 60, you still have if you're 40 and you're going to retire at 60, you should have a 20-year time horizon.
Right.
No reason in the world, in my opinion, and again, I'm not giving specific advice here, but just general, At 40, you got 20 years left. No reason to have any bonds. You should be 100% stock. No reason to even think about going to cash. No reason to even flip on the news and find out what's going on, because you're probably going to see one or two recessions in that 20 years, but you have time to recover. So the younger you are, rule of thumb, the younger you are, you should be more aggressive. That way your money grows at a much more, hopefully much more rapid rate over time. And you should also consider using like the Roth IRA. So as you were kind of asking that question, I think there's a lot of things that can cloud the vision and thinking of investors. And I think it gets that way for the retiree too. I think that, when you get near retirement or you move into retirement, you're thinking, oh, I can't afford to take any risk right now. I really got to put everything in this CD, or, I went to this tax workshop and this guy at the, insurance guy at the library was telling me I gotta put everything in an annuity and keep it safe. And that's just not the case. I think the biggest thing that a retiree can do today is actually build a plan, build like a retirement plan, and understand how your investments are likely to perform long-term, and then how you're going to take out income in retirement, how you're going to do that in a tax efficient manner. And if you have that plan in place, then I can tell you that you tend to relax a little bit, knowing that the plan is developed and built, and these are where the income pieces are coming from, versus, not having the plan. Because I can tell you, if I'm in the car and I don't have the maps on my phone, if I'm in a place where I don't really know where I'm going, it's very frustrating to me. And I become very agitated very, very quickly, because I'm like taking a wrong turn and I'm getting twisted around. And, I've even been in New York City. It's been a long time, but years ago I was up there. A lot of people know my sons at one point were on a TV show.
Yes.
Yeah. So I can remember being in New York City, and there's so many buildings. The buildings are so densely packed into the city that you can't get good GPS signal. So I'm like in New York City. I don't know where I'm going. These people are like 1 inch off my bumper and they're pulling out in front of you.
It's stressful.
And I'm like, oh my gosh, I'm freaking out of my mind, and the not so good thoughts are flying through my head. And I'm like, I just want to get across that bridge and back out of this city and get home. But, creating that plan in retirement, I think really does a lot to help, I think, just kind of relieve the pressure and the stress of the weightiness of retirement. Because Luann, I can tell you that a lot of people out there today listening to the show, they're not putting enough thought into how heavy the emotional and psychological burden is of retirement. Mm-hmm. There's so much psychology and so much emotion that's going to play into it. Because you ever met the person at the office or in your company or whatever that's very jumpy, and you're like, hey, and they're like, wow, you scared me. That's how retirement's going to feel for a lot of people.
Yeah.
Because what's going to happen is an alert's going to go across on your phone. You're like, oh my gosh, what is that?
Yes.
Oh, the market's dropping. It's off 10 points, and the market's, I can't,
You're scaring us.
Yeah, no, that's how, there's so many people that going into retirement, they're not putting enough thought into how heavy that's going to be and how to deal with that. And one of the ways to deal with that is to save adequately, and then to build a plan. So you kind of have the map laid out for you, and you know how things are going to play out in retirement. So I don't know. That's just my thoughts on it.
So, okay. So in that plan, if you don't want to invest in the markets, are there other options?
Yeah, there are. So first of all, I think I'm a firm believer in the markets long-term. And I know, I see it just like everybody. I'm immersed in it as much as anybody, in terms of, paying attention to the market and stuff like that. But I am a firm believer long-term that the markets go up and to the right. And I do think that in retirement, you do have to be careful. I 100% think that you need a plan. I think you need a plan with a Monte Carlo analysis. I think you also need to take into account sequence risk, where, what if the markets are down? Where are you going to pull money from? Because you don't want to pull money from a down portfolio. So I'm a 100% big advocate for being in the market and being respectful of the market and your retirement situation, so that you don't go in kind of crazy and lose a lot of money. But at the same time, I have conservative clients that are pretty conservative, and they don't want to put all their money there. I have one client that I'm thinking of right now. He's an avid TV watcher. So I know he's probably not listening to the radio show, but he's probably watching me on TV.
Yeah.
But he's very, very conservative, and he just wants very, very little exposure in the market. So we've set up very conservative fixed annuities and fixed index annuities for him, because that fits what he's willing to put up with. So he likes the idea of having products that don't have any fees. Now he knows that they have surrender charges, and he knows that the companies need to be A-rated and all of that good stuff. And he knows the claims paying ability of the insurance company backs the policies. So he's fully fine with all that. And we have him spread across multiple different companies. But the rates are so good right now that he has the potential in some of these annuities to generate 5 and 6% rate of return just based on where rates are today.
Yeah.
And he's fine with that. And, that's one person's opinion, so this is, when we're talking about, I don't want to get too specific here, but, some people, they prefer that. And for some people, having something that's going to generate 5 or 6% without risk, without fees, no downside to it. And, you're going to have limited upside. So here's what you have to deal with at that point. You have to deal with FOMO because the fear of missing out. Because in some of those fixed type products that you have, you're going to limit your upside for sure, but you're going to cover yourself on the downside. So in this particular case, if an individual says, you know what, I value not losing money over making lots of money, then those types of products work okay in certain situations.
Right.
So yeah, there's different products out there. So like I said a few seconds ago, rates are still, attractive. The lower those rates come down, so we talked about the Feds earlier in the show dropping rates, and the further the rates come down, then the less attractive the products will be. But I think they still work for some people today based upon where things are at today. I think you just have to go in and talk to somebody. I mean, in our at our office, we don't lead with product, we lead with plan. Yeah, we lead with data, lead with data first, lead with plan. We do enough digging around where, I was kind of thinking of another client or prospect that I met with. They were one of the ones that told me, and I kind of repeated back to them. I said, are you telling me? And I said, if I'm wrong here, then I need you to tell me. But after spending 45 minutes with you, you're placing more value in not losing money. Like, it's so important to you not to lose money. And he said, absolutely. I don't care if I make what the market makes. I just don't want to lose what I have, because I want to retire and I don't want to stress. And so he said, I want to have X amount of dollars in a position where it doesn't go down. And that also gives him the ability to pull out of that account if he needs to in a down market as well. So it creates a stable place in which to pull money from. So again, we don't lead with product, we lead with data. Try to get some details on a client in that discovery session. Pretty simple process that we do. It lasts about an hour and 15 minutes. It's all confidential. No financial decisions are made in that meeting. It's just an opportunity for someone to get to know us, for us to get to know you. We ask a lot of questions. Some are pretty, invasive, but it gives us an opportunity to learn more about your situation. If you'd like to set up that discovery call, all you got to do is give us a call, 256-937-2010. Again, the number is 256-937-2010. And Lou Ann, I just looked down and we are actually out of time.
We're done.
So,
we're done.
Great show. Yeah, great show.
Yes.
It was fun. Good to talk to you. I'm glad you had a good Thanksgiving.
Yes.
We'll see you next week.
Okay.
Hope everybody has an awesome and blessed week. And remember to serve every person in every situation with a servant heart.
AE Wealth Management LLC provides services without regards to religious affiliation, and the views of individual advisors are not necessarily the views of AE Wealth Management.
Please remember that converting an employer plan account to a Roth IRA is a taxable event. Increased taxable income from the Roth IRA conversion may have several consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA.
Investment advisory products and services made available through AE Wealth Management LLC, a registered investment advisor. Insurance products are offered through the insurance business WG Insurance Services. WG Financial Group is an investment advisory practice that offers products and services through AE Wealth Management LLC, a registered investment advisor. AEWM does not offer insurance products. Insurance products offered by WG Insurance Services are not subject to investment advisor requirements. AEWM and WG Insurance Services are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. WG Financial Group is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by WG Financial Group. This radio show is a paid placement.